Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Tuesday edition, shortened trading week out there. So hope you all did well. Hope Monday was a great, enjoyable day for you. I wanted to go down to the beach and spend some time by the water, but it was so dang hot. So didn't do the beach. Went to a little brewing company, had a great weekend, a lot of dancing, a lot of fun, hanging out with friends. So hope you had a great Labor Day weekend as well. But now back to the grind, back to the real stuff, back to work, back to making some money in these markets. The sad part is it boils down to this graphic right here. Here goes September. Now, the good news is the markets rebounded significantly off of their lows, but the reality was September got off to a start that is pretty normal. Historically, the month of September is a negative one, and I was going to go through a whole bunch of different facts, figures, and statistics, but I thought, you know what? I'll just save you guys all the effort. This is the Trading Academy newsletter, and I will I'll click this link right here. So the article that you can see on your screen says September, the market's most misunderstood month by yours truly, Merlin Rothfeld. I will click on that one and I will copy that over so you guys can have that. There we go. And now you can read that article all by yourself. Done. Show's over. Let's go. What's interesting about it is, historically, the S&P 500 has a negative 0.7 return if you go back, the 1950s on the S&P 500. However, markets always have a way of proving us wrong. We have so many market mantras like sell in May and go away, or as goes January, so goes the rest of the year. And, there's all these little market segments that over the course of time certainly have a documented performance or underperformance, as the case may be, for the month of September. And many of you talked over the past couple of shows about how, I'm going to get ready to hedge myself here and get ready for short positions in the market and protect myself should these markets crash, which is probably the prudent thing to do. Oh, thanks. You already read it, Les? Look at you on fire. It just came out yesterday. All right. Well, hope it was fun. I try to have a lively spirit when I write these ones and make them a little more engaging. But yeah, it's the bottom line of the article, if I was to truncate it down into a real quick summary, is look, these facts are there for a reason. These stats are there for a reason. And there's justification as to why it is. I put in here, post-summer rebalancing. You have tax loss harvesting beginning early. You have Q4 uncertainty. And then really the big one, which may have been number one, I think this year is certainly Fed jitters. It's not the normal, but the Fed jitters are a big part of it. And I put in here, it's like, don't be passive. If you're one of those people that feels like things are slowing down and starting to get a little bit ugly, as I am, I would say I'm actually in that camp of things are starting to look a little bit uncomfortable, we'll say, on this market trajectory we're on, then maybe you do protect yourself. We'll get to that here in just a second about some of the hedging and things you can do to protect your portfolio. But let's just go look at that S&P 500. Now, remember, we talked about this line multiple times. Of course, there's many lines on your screen here, and unfortunately, I can't change. Well, see if I can change this to a color that I can actually see. Let's go to style. You guys know I can't see. I'll go yellow, which may be hard for you guys to see. But the yellow line there is 6,362.75. And I've been saying that if we get below that, then that starts to change the narrative of what the trend actually is for our market, right? We are still in a period where we're making higher highs and higher lows. We have not really erased a swing or pivot low. The bottom line you see on your screen here, which I think is red, is 6,239.5. And notice we came back down and retested it, but we did not break it. And I think I was saying the exact same thing at that moment in time. And that thing was, if we get below 6239.5, we're now making a new pivot low. That is not good. That means that technically that uptrend would be broken, but we didn't break it. Now we have the exact same picture up here where we established this low of 6,362.75 and said if we get below that one, that again is making a pivot or swing low, new swing low. The good news for us today is at one point, your S&P 500 looked real bad. It was getting to that point where like, oh, this looks like this could be a watershed moment. All of a sudden, we see things go crashing back down. We're down 1.56% at its depth today. At the end of the day, though, we finished only down 0.4%. So all in all, I would say a decent day to have recouped all that. And for those that know candlestick patterns, as all my audience does, because I love this pattern right here, you could argue that has hammerish, right? Hammerish tendencies. Hammer meaning that it has a long bottoming tail. The real body, which in this case is red, is up near the top. It's hammer-ish. It's not exactly a hammer, but it did regain a lot of the losses. It shot up off those lows to the tune of 1.17% at the end of the day. So the buyers really helped push this thing higher. That's a great sign. It does feel like market movement to the upside. We could add volume on there too. And I think you're going to see higher volume here on the opening month or for the month of September. And Glenn, partially that's going to be because of this belief that September is such a bad month. Now let's break it apart into 5-minute slices here and see when the real volume came in. All right. So most of it happened early in the morning. I didn't see anything specifically down here near the middle of the day that would cause this thing to bounce other than we were coming near that level we talked about, which is just slightly below us. You can see in yellow there, that's that 63, 62 mark. Our intraday low today looks like it was roughly 6,372. So we're about 10 points off of that kind of floor there. But, really kind of higher volume all day. Certainly near the end of the day, you saw this big spike, which certainly caused a nice big pop up. But it's the overnight sell-off that really killed us, right? We actually had a decent day from the second half, but really last night's overnight session really started to, eat away at or make it difficult for us to overcome those losses. So we still had an ugly-looking chart because it was a big red candle, but all in all, the way it finished, I'm saying incredibly strong. It looks great from a finish perspective. So got to feel good about that. Let me get my candle back up here to normal spot. So all in all, I think we're in a good spot. Even though September did start off with a negative 0.39%. Again, I copied over the newsletter for you to read. Actually, let me do the whole newsletter. I know that some people might want the whole newsletter. We've got 3 great articles that are written this month. One is by Bashir Chaya, which talked about index funds, and it really is an overview of what index funds, how they're constructed, and what they mean. A foundational approach to broad market exposure by Bashir Chaya. Mine was the markets, the most misunderstood month, September. And then you had Mark Schlichting writes, The Trader's Secret Weapon, Documentation. It sounds so dreaded. Documentation. Well, journaling, keeping track of things, making sure you know all the information that's out there. And of course, for those of you who are Trading Academy graduates, I'm going to quickly flip to this stuff here. In the newsletter, there are tons of upcoming classes for Trading Academy, not just physical location, but also there's online classes, there's meetups, there's all sorts of things going on. So I would encourage you to check out your newsletter to find out more information about something that's near you, and retake classes, guys. You really should retake those classes, get back in the physical centers. And of course, there's the Orlando Money Show. October 16th through 18th, I will be presenting 2 different presentations here. I don't have my teaching schedule quite yet, but I will get that here and I'll publicize that for you. I do believe that if you use this link, I think there might be a discount code. I'm not sure, but I will put it in there for anybody who happens to be in Orlando. October, what did I say? I had the date on the newsletter there. October 16th through 18th. I won't be there the full time. I need to look at my calendar here to know exactly when I'm going to be there, but have not bought my flight yet, so that's the other tricky part. But I will be in Orlando, and then what else do we have on here? All kinds of other classes. These are all our focus classes coming up, so you know when the next one is starting, and more and more stuff on Trading Academy. So anyway, that's our newsletter. If you haven't subscribed to that one, go for it. We put that one out the first of every month, and who knows? I watch my core option futures videos every year. Cool. Yeah, it is a good refresh, Tommy, but it's also really good to get back in a classroom. If you like if you watch Larry's options videos, the self-paced stuff, that's great. But as soon as you get into live classrooms, and maybe some people are just different in how they learn. I really think it's critical to, since you have access to so many different instructors, maybe you take options with Mark Schlichting, or maybe you take options with Russ Allen, or maybe you take options with Larry Jacobson, and you know that all 3 of those people are completely different in how they utilize options, but they're still using these options to hopefully generate income streams or protect their portfolios or just outright trade on them. So to me, very valuable. Retake them. Learn from people. I think one of the main reasons that drew me in to Trading Academy back in the day was physical teaching, actual real instructors in front of me, real hands-on market data. And I know those of you who've been to the centers appreciate that as well. Is anyone here going to Orlando? Yes, Les will be there. Les said he's going, and I will see Les for sure. We'll probably go out and have some dinner or drinks or something. Toby says, I wish to go to the physical class. You should. I've got the calendar here. So when you look at the calendar right here at the bottom, these are all the upcoming classes. I can't zoom in on this one. That's lame. Oh, here we go. It doesn't get any bigger. So you can see if you're taking core strategy or futures or options, you can see the local centers and which one has upcoming classes. So there we go. Anyway, this wasn't meant to be a promotion for Trading Academy. It was actually just talking about the newsletter and promoting my article, but there we go. Okay, so should we be paranoid? No, I don't think we should be paranoid. Should we be freaked out about September? No, I don't think we should be freaked out. If it's one of those things that you're terrified about, then I think what you need to do is you need to take a good look at your portfolio and figure out how to protect it. So Ed up in San Jose. Thanks, Ed. Appreciate you always listening. One of these days we'll meet. He writes, if one suspects a market downturn is likely and wishes to protect a diversified portfolio by buying puts on an index, say the SPX, SPY, NDX, or triple Qs, I have some questions about doing this. Okay, here we go. Number one, which index? All right. So ultimately what I think, if you're someone that says, I've got all these different portfolio holdings, how do I protect that? So let's say you went and you did, and I'm just going to keep the numbers simple for myself. You went and you did an analysis of your holdings. Let's say you had $100,000 worth, right? Not much, but I'm just doing it for a simple example. $100,000. Okay, fine. So now you have to look within that and with a ballpark idea, figure out which index might be best for you. So most likely, if you don't want to do the work, most likely the S&P would be the way to go, right? So you buy SPX or SPY. So I would certainly look through, and if you have a bunch of commodities and things like that, well, maybe you need to look at a commodity ETF to hedge yourself there. But in general, I think most of us would just use the SPY. Now, it could also be the SPX, which of course is slightly different. We shall see how that transpires here in just a second. So I'm going to just say, in a nutshell, let's assume that you've got some tech holdings and you got a wide, diversified portfolio. Look, let's just call it SPY. Okay, so question number 2 was, which strike or strikes? This gets very challenging because it's hard to correct. No, it isn't options only. Yeah, you can't trade the index. Correct. Yes, you need options on it. So this is where it gets a little bit tricky because you say which strike or strikes. The natural inclination would be to do an at-the-money strike. So if we looked out here and went SPY, let me bring it up for you guys. Here's the S&P 500. And right now we're at 640, right? I know it's up in the after-hour session. We'll just call it up. We're at 640. Well, at 640, if I did the strike right now, I'm going to pay a heavy premium. And I guess the other piece that needs to be talked about in tandem with this from Ed was question number 3, which is what expiration date? So ultimately, what does this boil down to? It boils down to how long do you think this market is going to be selling off? If you're somebody who believes it's just going to be for the month of September, let's say you want to do 2 months worth of protection, right? October and September. As I saw posted in a chat here, Margaret says, I thought October was the crash month. October is the crash month, meaning October actually does fine, but if a big crash happens, it seems to happen in October. September is the month that overall underperforms. Now that sounds somewhat ominous, doesn't it? Right? Say it underperforms. It's only averaging like negative 0.7%. It's not a giant down move, right? It's not a huge end of the world type move there for the S&P. It's slightly down, and it's the only negative month out of the 12 months that we have, and that might be changing depending on which data set you pull from. So let's say you wanted to hedge for those 2 months, because typically going into November and December, we get our Santa Claus rallies and markets start to take off for the end of the year, etc. So, okay, fine. Let's say we wanted 2 months worth of protection. Well, that makes it fairly easy for us to understand what our timeline is here. So I'll put a vertical line. Right now we are in September, and we're September 1st. So I'll go all the way out to November 1st. So essentially, I'm looking for protection on that window of time right there, from where current price is to the blue vertical bar. Okay, fine. Big Eb says, Kramer says, September is the worst. Damn, we're going to rally this month. And it's so funny how that guy has, I wonder if he just like shakes his head sometimes and goes, am I an actual joke? Like, I wonder if he looks in the mirror and just goes, do people think I'm an absolute joke? Because it seems like everybody now mocks Jim Cramer. And it's funny, Big Eb, you may have been doing this a long time, but I remember back in 1998, we were making fun of Jim Cramer because his calls were always wrong. And we actually built, I don't know, I have a chopstick up here for stirring my tea, but I'm using it now as a pointing object. I actually built an inverse Cramer portfolio multiple years. This is long before there was an inverse Cramer ETF, or people even thought about that. And man, it's performed very well, the inverse Cramer portfolio. Well, he's not a clown. I mean, he's not a clown. He's actually a good guy. He's just caught up in the hype of media, right? He's just an entertainer. I do drink tea, absolutely. Yep. I love tea, especially I mean, on hot days like this, iced tea. But today we're just doing water. So with Jim Cramer, you got to remember a couple things. Number one is he worked for Goldman Sachs. Right away, everybody here should look at him with a cocked eye a little bit and be like, hey, wait a minute. You work for Goldman Sachs. Look, man, some of you went to college. How many of you were in a fraternity or sorority in college? Just type in the chat, yes or no. Fraternity or sorority, either one. A fraternity was a brotherhood or a sisterhood, right? It was a group where you all had competitive advantage because you all kind of worked together. I remember when the fraternity I rushed, I never was actually in it, I just rushed it. They had all the exams, so you could just like go through an accordion file and figure out which ones we had the test on. But it's also years down the road, those of the in fraternities, you develop some friendships there that are very, very strong. And those friendships may give you access to jobs, businesses, and things that you may have not have gotten on your own. And to me, that is the power of a fraternity. I'll tell you, man, if I had kids and went to college, I would encourage them to join a fraternity. Just because of the brotherhood. Well, if it was a son, if it was a girl, I would say a sports basketball brotherhood. Yeah, there you go. Nope. Started working at 17, never looked back. Good. Well, there's something to be said for that, Big Ab, that hard-working man, getting stuff done. But a brotherhood, or, a group, if you will, like a fraternity or a sorority, I think is very powerful. And I would argue that Goldman Sachs is a brotherhood. If you notice that when people leave Goldman Sachs, like there are people that work for the Bank of Canada, the Central Bank of Canada that work for Goldman Sachs, and other central banks around the world are former Goldman Sachs employees. Goldman Sachs has tentacles all over the place. Now, because I know that, it always makes me suspect when I hear Jim Cramer on CNBC going, booyah, we got to buy this and XYZ. It would make me, I would be shocked to find out that he was not being encouraged, swayed, or influenced by Goldman Sachs or his fellow cronies to promote a security which may in fact not be a good security. So imagine this. And by the way, there's a great video which I believe Ed has shared before with us, which on YouTube, it's called Jim Cramer Manipulation. Now, they've taken it down many times. One second, I'm going to bring it up. Manipulation. It gets put up and it gets taken down. So they've taken it down again. But we can find it. I have it somewhere, the Jim Cramer. It was actually sent to me by Ed up in San Jose. But in this video, Jim Cramer talks specifically about how you disseminate fake news. Your job is to foment, to create an impression on the market, and basically you give fake news to the market so that you can do something else with your shares, which is one of the reasons I built this wall of distrust for the entire financial system. I mean, when you watch that video, guys, it is jaw-dropping on what he says goes on in the scenes. And it's not like it's a surprise. I always thought that, but to have that validation from someone like Jim Cramer, who is literally saying, let's say you've got an overweight position in Apple, and you need to mark that market to pop so you can unload your Apple shares because you know something bad's about to come out. And so he goes, you call up that bozo reporter at the Wall Street Journal or CNBC, and you're telling them all this fake information that you got good news on about this and that and the other thing. It's just jaw-dropping. And for anyone who hasn't seen it, if you haven't seen it, email me at TraderMerlin@gmail.com. I'll find it and I'll send it to you. It is a must-watch. It is honestly one of the most eye-opening videos you'll ever see about what really goes on behind the scenes of financial markets. Now, remember, when Jim Cramer recorded this, it was not meant to be a YouTube video. It was for an investment group of fund managers on what you're supposed to do and how you make money as a fund manager. And now, that video it's legendary. I think it even got him on Jon Stewart, and Jon Stewart tore him apart about that video. And conveniently, that video is not on YouTube anymore. And I'm pretty sure every time it gets put up, they'll take it down. So I won't post it. But email me if you want it, and I'll do my best to find that video for you, and I'll share it with you. So anyway, I don't know how we got on that long-winded tangent there, but let's go back to the topic at hand, which is hedging, right? So for Ed, which index? For me, SPY. Now, you could use SPX, but SPX controls right now a $640,000 contract. So one SPX is a $640,000 portfolio. And remember, in our example, I have a $100,000 portfolio. So that wouldn't work, right? Now, let's say you had a multi-million dollar portfolio. Yes, you could use SPX because one contract of the SPX would be $640,000 controlled. So if you had, let's say, a $640,000 portfolio, you could buy one SPX put outdated 2 months, and then you'd protect your portfolio. Now the question is, at what strike price, right? That's a real tricky one, and you could do a wide variety of different things here, right? Jump change. You could do an at the money, which is what most people will do, and that's going to protect your portfolio completely. So right here is in yellow is where the market closed today, or that's not where it closed today. Sorry, I can't even tell the top and bottom candles. That's why I like black and white candles. There you go. That's the market closed today. So you could sell the 640 puts right now at the money, but those are going to be relatively expensive. You do things at the money, that's going to be much higher, but that is full protection of your portfolio. Now, if you have a $100,000 portfolio, one SPY contract covers $64,000 of it. So you'd actually have to buy, or you'd buy 2 contracts, and you'd be literally overprotected on that if you did 2 contracts of SPY, 2-month expiration for November at 640. So at the money. That's full protection, but it could be expensive. So if you really felt that this market was going to tank this month, and I mean tank, great, pay that money. Now you could also go out further out of the money, do out of the money strikes. So maybe you decide to do, let's say, the 630s. Well, remember, the problem is in order to get paid on those 630s, the market has to drop all the way down to that and before it really starts making money. That means the market, at this case, would have to drop about 1.59%, which we know is no big deal. But remember, the average monthly decline for September, going back to the 1950s, is only negative 0.7%. So here you'd be selling a put, if you did the 630 strikes, that are 1.5% out of the market, or out of the money, and the S&P historically drops 0.7%. So most likely these are going to expire worthless. So it's not, at the money puts have a delta of 50 cents, so you won't fully protect your portfolio. Yeah, true. So you want a delta of 1, so what do you do, 2 of them? So the 2 contracts to get that delta of 1. Is it 50? Is it 50 delta right now? Yeah, it would be 50 if it's at the money. So yes, you would need 2 then, correct, Liz? To fully hedge, you need 2. If you got a delta of 50, right? Exactly, and that's the tricky part is when we get out of the money, the deltas change. So if you got a delta of 30 or 33. Then you need to have 3 contracts to offset all your portfolio. So your delta, you're trying to get a delta of 1 with it, and then it's also dealing with what your strike prices are. So how many contracts, Big Ed, Ed says? Well, with regards to how many contracts, you have to take into those 2 considerations. It would be the current strike price. What are you going to use? You can do at the money, you can do out of the money. And then knowing that each one controls $64,000, you have a general idea of how much it should cover. But as Liz points out, if the delta is 50, you need a delta of 1 to cover your position. So if the delta is 50, you need 2 contracts. If the delta is 25, you need 4 contracts. So you need to adjust the number of contracts based off the delta to fully protect your position. And that's going to change, certainly depending on how far out in time you go as well. But if price falls, you get the advantage of the gamma effect. Yeah, that's a little too complex for it to go gamma effect, but yes. Big Ed says, I rarely fully hedge, but I like to protect a decent portion of my portfolio. And that's something else that I've seen a lot of people do, is they'll do, like, let's say, 7 at the money, and then they'll do 3 out of the money. So technically they have 10 contracts, but they're offsetting, and it lowers that. It reduces the cost of your options significantly, but also those other options, those out of the money ones, will probably going to expire worthless, right? The at the money ones, if you do think the market's going to sell off, will probably do okay. So it's a combination there, Ed, of the strike price, which it's up to you. If you thought the market's going to fall from here, okay, you could do the 640 strikes right now, but if the delta is 50, you need 2 of those contracts to offset $64,000 worth, all right? In that example, if we got a delta of 50 and had a $100,000 portfolio, I could actually use 3 contracts, right? Because one options contract, one put contract, the S&P is $64,000. Let me bring up a calculator and I can see if I can show you. Okay, so you got $64,000 as one S&P contract, but my portfolio is $100,000. Now, in order to get that $64,000 fully covered at the money, I need 2 contracts. That would give me 64. Well, half of 64 is 32, so if I add plus 32,000, basically with 3 contracts, I could cover $96,000 of my portfolio. So there you go. So long-winded answer there, Ed. That's how I would look at it. I would look at it as, for me, it's going to be the SPY, unless my portfolio is big. So if you got a multi-million-dollar portfolio, I would go out there with SPX. I'll do SPX. There are some tax benefits to that one as well. Which strike? It depends on you and how far you think it's going to fall. I like going out of the money personally. I don't like doing at the money because they're so expensive. The trade I made back in 2000 might have been one of the luckiest, greatest trades I've ever made. I actually had a gentleman on the program. We did a show on Power Trading Radio called How to Prepare for the Black Swan Event. And he goes, you load up on super cheap out-of-the-money options. You go out a few months. They're so cheap, nobody even cares about them. And so I bought a bunch of them out of the money. And within 2 weeks, we started having the COVID issues. And ended up being just such a lucky. Is the strike the most important decision or expiration date? I don't think the strike is the most important decision. To me, it's how much time you have for yourself. Remember, if you're buying put options, you want more time. If you're selling, you want less time. So at least in this example we looked at here, where that blue line represents at least it's 2 months out. It's a little bit better. You're buying time there, but you're also going to have to pay for that, right? If you're buying a 2-month option, the further out you go, the more you're going to be paying premium-wise, but you also give yourself the benefit of time. As an option seller, I don't like to sell anything that's past 30 days. Typically, most of mine are going to be weeklies now because of that. So in this example, you got plenty of time here, but to me, that's the most important decision, Margaret, is how long do I think it's going to go? Right? What's the cycle look like? Or do we expect to see, a month of September that looks like this? So this is the end of August. Is September going to look like this? Then I'm in the right trade. Is September going to look like this? Then I'm making the wrong trade. So it really, to me, boils down to what are my expectations of the month of September? And if you look at the current chart, look, it is slowing down. It doesn't feel like it has such an accelerated rate of ascent. Today was a bad day just because it makes it look like it's flat to almost channeling, right? Over the past few, let's say, month, right? It feels like it almost has been channeling sideways. So today was not good. Ideally, if we took today's candle out of this looks great. Uptrend. Higher highs, higher lows, looks fine. This isn't the end of the world today, but it certainly shows a bit of inherent weakness. And I think that might be due to the historical perception that September is a negative month and people just jumping the gun there and falling for whatever literature or marketing stuff was thrown their way to cause them to be fearful. As I've said a few times, ultimately, if we break these lows that we established back here on August 20th, that might be of concern. But for now, it looks like a big M pattern on the SPY daily chart. Yeah, it's not quite an M. I mean, it does have the same characteristics, right? But an M would be making the same high. This is actually a little bit higher. So if you remove today's candle, it's a perfect uptrend. Higher highs, higher lows. Didn't make any new lows, so this looks great. Today shows a bit of weakness. Really, to me, it depends on what tomorrow looks like. Do we sell off? I'll go back to the future side of things. Do we sell off here and break that 6,362 level? If we do, then, it might be reactionary to buying some puts. Today, the way the market moved up and come off the lows significantly, probably was a good opportunity to be buying some puts because the premium was going to be dropping on those ones. Most people aren't buying puts when markets are rallying to the upside. Okay, looks like a retracement to me, fill in the gap. Let's on SPY. We could definitely fill this gap as well, and you have a small little gap here that we filled. So, I don't think that there's anything to worry about. It's really, I think the red light will go on for me from a circuit breaker perspective if we break this lower level here that I've got mapped out in yellow. And for now, I think that we're safe. So, Ed, really not much that you missed there with regards to your hedging. Now, let's say that you're only in Magnificent 7 stocks. Let's say you've got your portfolio consists of Apple, Amazon, Microsoft, Tesla, and Palantir, like my portfolio. then maybe I don't want to use the SPX or SPY. Maybe I use the triple Qs. And there you have a different notional value for each one of those contracts. You know, when you look at the triple Qs and it's trading at $565, well, this is a $56,000 contract. So again, if I have a $56,000 portfolio and I want to cover it fully at the money, I would sell 2 of these. But again, I don't like to do at the monies. Very rarely will I do at the money. Okay. What else do I have here? So, yeah, I didn't remember this. So this question came in from Mamon, and you had it here earlier. Let me read the full question. Ramon says, how do you play the fracturing into 2 companies? I already hold a small, long position. He's talking about the Heinz breakup, okay? Heinz breakup. So let's look at this real quick. Yeah, we'll get to Google here when we wrap up. He says, how do you play the fracturing into 2 companies? Already hold a small position, and he's talking about Kraft Heinz. So let's go up here, and we will get, there you go. And I'll bring up the chart for you. Let's go KFT. Oops. It's KHC. I always forget that one. So here's your Kraft Heinz, right? And I didn't see the details of this, Mamon, but typically what happens when a company splits into multiple pieces is initially there's this knee-jerk reaction of negative move, but in the long run it's positive. It's positive because you have 2 separate companies now. And almost every single time, it's not immediate, but if you wait 6 months, a year after they split into multiple companies, they tend to do rather well. And remember, you're going to get shares of each of those companies, not sure exactly how they're going to allocate it. For myself, I would leave it. I have no interest in owning ketchup. People are addicted to it, man. It's red sugar. Terrible for you. But, it's food products. The ones I've been a part of was, Connexent split off into Skyworks. I've been part of GE split as well when they split, and I got the different companies from that one. And over time, they've done rather well. But that's GE. That's more tech, and engines and things like that. Kraft Heinz, maybe problematic long haul. But you got a small position. I mean, already you're probably underwater anyway because this thing looks pretty bad. Looking chart. I mean, we were peaking out right around $45 back last year, 2021, and now you're down here at $26. This looks pretty grim. So personally, if it was me and I had a small position, I would just keep it. I would play the split on those 2 and then let them hold and see how it goes over time. Because one's going to be catch up, and I think the other one's going to be like Lunchables and other Oscar Mayer and food products like that. No, one of them's going to go just like exclusively the ketchup brand and maybe sauces, and the other one's going to be like food products like Oscar Mayer and Lunchables and whatever else their products are. Yeah, been a dog with small enough it doesn't hurt too much. Yeah, I would just sit and watch that one. I mean, look, Kraft's a big name. It's not like, if anything, they're going to get acquired, and that might help them as well. All right, everyone's talking about Google. Yeah, man. Went up another 7% in the after hours. Did not see that news. From the sounds of it, they got favorable reading from the judge. The verdict was good. I have not read through it, so I'll go and see what is ultimately said there with regards to Google and what the settlement was. Obviously, well received by the market. You're up 7.42% in the after-hour session, so that is great news for anybody who was holding Google. And again, this was my big red flag earlier this year. I was telling you I was fairly nervous on Google and bearish on it just because you have 2 federal investigations, and it looks like one or both of those may be settled. I'll have to look at that one a little bit later on tonight. Not going to do it live for you right now because it would take me too long to read it because I'm a slow reader. But fantastic. And I think, Steven, don't you own Google? I think I remember you saying you had Google. Steven also said 6% dividend on Kraft. Now, that's going to change too. So when they split this into 2 separate companies, my guess is you're going to see that split as well. You're going to see a change in the dividend with regards to what Google will be paying. What Heinz will be paying. Marlon Mark says they avoided the worst case penalties. Good. Well, they avoided the worst case penalties, but I'm still curious are there any penalties, right? What was the damage to them? Chio says, Merlin, are you still selling your crypto in the next couple of months? I have not moved anything yet. I have not moved anything off of my ledger. I've actually moved stuff onto my ledger, but that's really for class to show how to do transactions. I'm still on the fence about it. I'm nervous because I was really hoping that President Trump would have enacted something, because we heard about it during the campaign, that would remove capital gains taxes on cryptocurrencies. Suffice it to say that I have some significant gains on crypto. So if I were to close this out and sell these positions, I have monstrous capital gains hits, which I would be, I really would not want to pay. I'm be cutting a very, very large check. So I'm kind of like just holding on to it. But I don't think we're going to get any tax exemptions here. But as far as Bitcoin goes, it's been looking ugly. It's not looking good at all. Now, we did get a nice bounce today. We talked about this level on your screen here. I have too many yellow levels. But the middle zone there is the one we've been focusing on for about the past week. And you notice the last 4 days, it's hit it, it's hit it, it's hit it, it's hit it, and hasn't really broken down below it. And today had a nice rally. So this is great news. I mean, this is a little bit of a, take a deep breath here, sigh of relief, but it doesn't mean we're done. I was talking to some students this morning in my classes, and if you look at that, we do since early August, or mid-August, we've got lower lows and lower highs intact. It's making lower lows and lower highs. So this is not a great picture. The real challenge now for Bitcoin will be this upper yellow box, which is between, let's call it 112,000 and 113 and a quarter. Now, if it gets above that, then I think you're going to see it rip to the upside. I think you'll see much more of an upside move there for Bitcoin. But it just does not look good right now. It feels like things are just kind of, lingering down slowly. Bad. I do too, Steven. I've got IBIT as well. In one of my accounts, I got IBIT. I'm long as well. So let's see what did IBIT do today. I think last time I've been doing the wheel strategy on this, and I got exercised on Friday. 62 is my number. Oh, great. Fine. And we're already at 63. Love it. I did not sell calls against my position, but I'll probably sell at 64s or 6. I don't know if I'll do this week. I might do next week and get even more premium there. Yeah, that was Big Eb's a good point. He says, it's nice to see that Bitcoin did not follow the market down today, though. Yes, nice. And, this is why I always like watching the spot market, because really over the weekend it didn't do much. It kind of just flooded around here. So all in all, looking okay. Why would you sell knowing that Bitcoin will hit 250? I don't know that it's going to hit 250. I am suspecting, my hypothesis is we're going to hit 250. But remember, my hypothesis was we're going to hit 250,000 by November, which is that vertical yellow line in your screen. Honestly, to say we're going to get to that line by November, that's a tall order. Let me see what a big a percentage that would be. That's just 200,000. So to get to my original number of 250, we would have to see Bitcoin rally 125% in the next 59 days. That's not out of the ordinary. I mean, it's not like impossible, but it's certainly be one hell of a rally. I am just losing faith that that's going to happen. I don't think we're going to get up that high. Do we get to 160 by the end of the year? That certainly is absolutely doable in my book, but something's going to have to change fundamentally here. Steven, I hope it does too, but I don't think it will. You just got to be logical here. And keep in mind, guys, when I made this forecast for 250 on Bitcoin, it was back here in mid-2023. So, that's when we were down in the 30, 40, 50,000 range. So there we go. Sure. Anytime he wants to do a show, I'm always happy to do a show with Don. Yep, tell him, Lori, I'm happy anytime. Your crypto could be subject to long-term capital gains for the most part. Yes. Oh, it's all long-term capital gains. Yeah. Absolutely. But as Mick says, hope is not a good strategy. Yes. Hope is, as I always say in my classes, hope is the most vile, foul, disgusting four-letter word you can use in the financial markets. Hope implies that you don't know. And you're just like, I hope it works. No. Not hope. The hope doesn't work in trading, guys. Hope doesn't work in trading. A plan works in trading. Having educated thoughts, maybe, or putting your strategies to test, but not hope. Hopium. Yeah, bad stuff. Don't do it. Don't smoke hopium. It's not going to work for you. Okay. Somebody said they emailed me. Oh, that was Dakota. Okay, I got your email, Dakota, for the Jim Cramer video. I'll dig for that one and see if I can find it. It's great. I wish I could just post it on YouTube, but they'll find me and take it down. Trade the chart in front of you, not what you think. Yep, totally. So many people have blown their accounts by just trading what they think. Charts. It's all about the charts. Okay, let me show you current position. So we got this current position here, not doing really. CoreWeave is crushing me right now. CoreWeave is bad, but these have all been updated with new options positions added in. Here are the current options positions. The only one I didn't do any options on today was NVIDIA, which I kind of felt like I should have, but I didn't. It was down most of the day, and I thought we'd actually get some positive territory, but I did not sell calls against my position on NVIDIA, but I did add Palantir today. Yeah, I did Palantirs today. I sold the 160 calls, so we can go to their PLTR. I did have the 157.50s expiring last week, but I upped that to the 160s. I went just a little bit higher, which is fine with me. Make a little bit more if it does get there. Okay, so there's the Palantir strike on the screen. I'll get rid of these other lines so they don't confuse you, but that's my takeaway point for Palantir for this Friday. CRWV, which is way below that today. It was a pretty ugly down day. It was down over 11% at one point today. I have the 110s. That's that blue line up there. Not worried about that. That's going to happen on Friday. I have MicroStrategy. I have the 380 strikes, as you can see up at the top here. That's my 380 expiring this Friday, but I collected $1.80 on that one. And the one I made today was United Health. I sold the 320s today. I had the 310s last week, and I sold the 320s this week. So great if it does continue to move on up. I'll get an extra $10 worth of profit. I think I got 600 shares of that. How many do I have on that one? Yeah, I have 600 shares of that, so an extra $10 would be an extra $6,000 on that, so I'm okay with that. Now, those are the options I have, and again, the premium that I did collect, I did take out of the cost basis. That's a CB column as the cost basis column, so we're doing okay there. My cost basis on United Health, 262, and we're currently at 309, so great. Stay down there. Love it. Okay, let's see. What else we got? Merlin. Merlin, have you seen the Paul Tudor Jones video from 1987? I may have, Harrison. Off the top of my head, I can't think about which one that one it is. Don't marry a woman named Hope. Oh, that's mean. If anything, you want to see this candle engulf the monthly, then it'd be bullish in my opinion. Well, I forgot which chart we're on there, Drew. It closed above 125K this. Oh, for Bitcoin. Yes, I agree. If we can actually, I don't even think that that's that big of a deal. I do think that getting above 125 by the end of this month is actually not that big of a deal. If you go from current levels, let's get rid of this one here. For us to get back to all-time highs, you're looking at 12% for the month. And as you guys know, Bitcoin can move 12% in a day. It all depends on news. We did have Michael Saylor buy some more Bitcoin. I think he's up to 638 or 39,000 Bitcoin. But also, thanks, Margaret. Also keep your eye on Ethereum because, again, you have more Ethereum trusts started. You have a new one popped up. It's SBET, and then you have, what was the other guy? BMNR. So you got these Ethereum plays, these Ethereum treasury plays that are popping up as well, and I think that could boost. But really, to me, what's big for Ethereum is everybody's building on their ecosystem. That's the big one. That's the absolute big one. Okay, so I went through trades. Let me go through economic calendar here. Where did it go? I don't have my economic calendar on here. Fine, we'll just go and bring it up. Let's bring it on up. There's really nothing that exciting with earnings this week, but we'll bring up your calendar here because there is some good stuff. So we're jumping to Wednesday. So you had our ISM services, ISM manufacturing PMI numbers today. Came out a little worse than expectations, but better than the previous month. Remember, what we want to see is above 50, but really since 2022, late 2022, it's been below 50, which is not a good sign. So all in all, that's not a great news. We'd like to see it pop above 50, but we shall see. Now tomorrow, you can see we've got a couple things for the U.S. We start off with our jobs, our real first piece of jobs data for the week. We have our JOLTS job openings on Wednesday. That's expected to show a decline. And this is a big week, right? We all know that there's the JOLTS job openings on Wednesday, but on Thursday, you've got a twofer with the unemployment claims and an ADP non-farm employment change. And then on Friday, of course, you can see here we've got the unemployment rate, which is going to be a big unemployment rate here, which is going to be a big one. And they're actually expecting this to tick up from 4.2 to 4.3, which if you look at this table right here, going to 4.3 brings us to the highest point we've seen since August of 2024. And other than that, it would be going all the way back into November of 2021. So there we go. A lot of big long-term info there. Okay, I think from my perspective, I covered everything I needed to cover. If there was something that I missed, you guys let me know. I'm more than happy to cover it on tomorrow's show. If you want that Jim Cramer video, I will dig for it. I'm pretty sure it's on this computer somewhere. So you can email me at TraderMerlin@gmail.com. If there's something you would like me to discuss on on tomorrow's show. I'm happy to do so. I may be taking some days off. I'm not sure which ones. I've got a friend who's staying with me from Italy. He's going to be here for 2 weeks. So I'm going to spend some time with him, and that may include taking a couple days off here and there just so I can have some more time to go longer distance places with it. So we shall see. Did I dance? I did. I danced quite a bit this weekend. It was fun. I didn't show the pictures of the birthday on Sunday. I don't have them on this one, but I will. Where would I have those pictures? Yeah, those are all on Instagram. Did I find a girl? No. So I'm not. I need to be. I'm Steven. I'm looking to just be more social. I think me finding the right girl is about me expanding my my circle of friends, getting out there, being more active, doing more stuff, which I definitely did a lot of that. So, it was a great weekend. And my buddy Nick, who's going to be in town, he's just an awesome guy, and he rarely comes out to California, so it'll be a pretty fun one. Yeah, dog party was fun. I'll be honest, it was really awkward. My ex showed up because her dog and my dog are best friends. The only reason she showed up, and it was one of those things where it just kind of ruined the whole event. Just it's an odd energy in the air. Just did not feel right having her there. So, but that will be the last time that she sets foot in my house, unfortunately. She has burned that bridge. She has burned that bridge for sure. So, anyway, it is what it is. What's your Instagram? I'm not sure which one I did on. I did on Iowa on my dog's Instagram. I don't know if I posted on TraderMerlin. I don't use my TraderMerlin Instagram for pretty much anything. I did on my dog. My dog's name is Iowa. Let me see. Yeah, I can't share my phone. Let me see if I can share my phone here real quick. How much time we got? 47? We're getting late. Well, let me see if I can do this. Let's go here and check my internet. I might be able to share pictures with you, so I'll see if I can show it to you. 1 second. If I'm on this network, then I can. Okay, here we go. I'll show you some pictures here real quick. I got all day. Remind me later. And we are going to go share my phone with... how did I do this last time? Oh, well. I guess I'm not going to be able to do it. I can't remember how I do this. It was, yeah, I don't know where it is. There's a software I use where I shared my screen, and I can't remember what I did to do that, but I'll have to do it tomorrow. I'll get you some tomorrow. Here's the most important question. Who are you picking to win the Super Bowl? Easy, man. 49ers. Tune into tomorrow. I'll move those pictures up here and take them off my phone. I got to remember how to share my phone. I can't remember how to share my phone screen. It's kind of annoying me right now because I've done it before. But anyway. All right. Sorry, Big Ab. That'd be great if there were. It'd be great if there were, but it's okay. I'm not desperate. I will find someone that's great for me someday. Definitely better than what I had. That's the main goal. All right. All right. Check it out. Let's see. Yeah, I can't send. All right. I'll wrap up. I'll get these pictures to you guys tomorrow. There were some really cute ones of the dog show. Dog birthday party. I looked absolutely terrible, by the way. It was terrible. So you guys have a fantastic remainder of your day. If you have something you want me to discuss on tomorrow's show, email me, TraderMerlin@gmail.com. I'm off to the dog park to have a fantastic day. Hope you guys do as well, and I will see you all tomorrow. Take care.